And every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of anything in the mortgage industry. It's amazing the information that they get out there because they've got a 42% market share. Now, they tell us the rates that are locked. They don't tell us points paid, points received, APR, none of that stuff, just strictly the locked rates from what happened on Friday. And again, with 42% market share, they've got it covered. They've got it dialed in. And let's take a look and see what they told us from Friday. 30-year conforming rate, 7.014, up a little bit. 30-year jumbo rate, 7.229. That was up a lot. 30-year FHA loan, 6.813, down a bit. 30-year USDA, that's the rural areas, and generally no down payment. That was up 6.885, best loan on the market. It was down. Got to earn this one. It's a 30-year VA loan, 6.721. Let's see what's going on today. The 10-year Treasury is up 5 basis points, 4.097. The S&P 500 is up 29.5. Mortgage-backed securities are down 14 basis points. That means interest rates are going up a little bit today again, so we'll see what happens there. Why is all this happening? Well, it's followed through, a little bit of a follow-through from the jobs report from last Friday. Markets kind of dissecting that. Start to get to this point in the summer. A lot of the traders end up leaving early on Fridays just because the end of summer, now historically it was all because, school went back right after Labor Day. Doesn't happen that way as much anymore, but market again, we're looking at inflation coming out later this week. The last reading for June showed that the headline inflation declined from 3.8 to 3%, while core inflation dropped from 5.3 to 4.8. That's for those people that don't need any food or energy. Market is expecting July headline inflation to increase by 0.2%, which is a modest monthly gain. However, since the July being replaced from 2022 is slightly negative reading, year-over-year inflation is anticipated to go up 3% to 3.3%. This is a big head fake from the market and is more about comparisons than inflation rearing its head again. Federal Reserve members, as you know what I think about them.
Such an idiot.
They're not too smart, so they're going to probably start talking about raising rates again. Core rate is anticipated to come in at 0.2% in July, also not a bad reading. Remember, the Fed wants a 2.2% interest rate. So 0.2, if that was the same number all year long, that would be 2.4. Not bad. Helping the inflation readings, we used cars. I mentioned that in the last segment, which have been declining the past several months. Additionally, the shelter readings are coming in lighter, and they're replacing much higher numbers from last year. It will be a benefit. However, energy prices rose in July. Yeah, you felt that at the gas pump. The Fed's next meeting is in September, so they'll get to see another inflation reading after Thursdays. That's good. Black Knight home prices. Black Knight reported that home prices rose 0.7%. You listening, Diana Olek? I know that you don't get these things right very often. Chapman University, prices are going up on real estate. I know you just talk about median price, which is worthless. Additionally, as a result of the appreciation, average equity in homes has risen from $231,000 to $249,000. National number. Here in Southern California, our numbers are probably larger. Tappable equity, defined by retaining 20% equity in your home, increased from $185 to $199. Remember, if you need that equity, you got to be looking at those things. RSRNodebt.com. RSRNodebt.com. Understand what your blended household interest rate is, and then realize that if you need to get out of debt right now, if you want to get some of those debts off your books, we helped a family save $1,300 a month just recently by looking at this and going from a 3.5% interest rate to a 7% interest rate. Yeah, their interest rate doubles, and they save a boatload of money. How does that work? Well, you got to understand the way the amortization tables work. You have to understand what the long-term benefits are. Remember, it's also part of the two-step process. RSR2step.com. RSR2step.com. When you do a cash-out refi, you're going to have a hit on the interest rate because of cash-out refi. When you do a rate and term refi, that saves you money. In recessions, historically, interest rates drop. So what do? You take care of getting the cash out now, get your household bills under control, and then you deal with the refi when interest rates go down later, and you've already dealt with that cash out hit now. So then you have a long-term benefit. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You make the call, 800-306-1990, 800-306-1990.